All right, traders, welcome to today's recap. This is Christian from Martys Tribeca Trade Group, and we're going to go over a lot of numbers here in this video. So not only will this be the end of day market recap, but also end of week, end of month, end of quarter, and end of first half of the year. And I'm going to talk about some takeaways from the first half of the year, some things that I think that were surprising, both on the upside and on the downside, and some points to kind of look for the next year, what we're going to be focused on. Risk disclaimer in front of you. Everything that we're going through is for information purposes only. Please read the full risk disclaimer right there. So, here's the performance for the day. A very strong end of the week. Really impressive, I would say, the price action. And one of the things that I noticed too, and just the spreadsheet that I have up every day, and I show the end of day recap videos, is that the performance, we started the week and most of these things were red in terms of, just the 5-day, so basically everything is kind of turned from red to green in terms of, day by day. We've had a multiple day rally and an impressive one at that, considering, where we were. So let me dig in first to the, because again, I want this really to be kind of a review type video. And, here's the performance for the week, right, in terms of what led, and then we will go into some bigger concepts too. So 5-day performance, right, S&P up 1.5%, the small caps gained 2.1%. The Qs actually underperformed this week. They were just up 1% for the week. And really for the month, that wasn't where the strong outperformance was, which is, again, it's a little bit backwards because the Qs have had such a strong year. In fact, it's the strongest start of the year ever, I believe, for the Qs. So to see that, the Qs kind of, I don't want to say stalled because they still went up, but there was just other areas of the market that were actually performing better than that. Emerging markets were actually down for the last 5 days. TLT was up a little bit. Gold was up a little bit, found some support at the 200-day moving average. Value versus growth, both did pretty well for the week. Kind of interesting, some, clean energy and as well as more conventional energy, oil services, they were both up 6% for the week. Solar was strong today, saw a little bit of call buying today. Also got a couple positive notes from some brokers today. I think ENPH and also I believe First Solar too had a positive note from different brokers. But home builders, they've been consistent all year long. They were up another 4.4%. And there's the solar ETF right here, down up 3.6%. Materials and industrials also turning in both above 3% for the week. What was weak for the week? Kind of this is probably one of the first surprises to the downside, I would say, for the year, because biotech was down 4% for the week. Also just about flat for the year. So, kind of amazing. That's not what I would expect. If you told me how much the Qs were up this year, I would think, geez, well, because there is a decent amount of biotech in there too. I would think that biotech would probably be up somewhere 10 to 15%, but it's really been a laggard. There has been some deals that have been, kept the group going. Otherwise the group would be down for the year. So pretty interesting. Utilities were down. Utilities, consumer staples, the defensives. It has not been so far. 2023 has not been a year for the defensives, right? This has been more of a risk on rally. So there's the 5-day performance. I wanted to knock that out first for you. And I've got a spreadsheet up here, which I've put some numbers in. So, we'll start with where we are for the month, and then we'll talk about overall year to date. Again, a lot to talk about, and I'm looking at some of these numbers, and again, it's just amazing. So I'm going to start with the S&P, because That's the big index, right? For the month, I mean, really impressive, up 5.2% for the month. And I mean, that's a wonderful month. And for the year at this point, up 16%. And again, if like you saw these numbers at the end of the year, you would think, wow, these are great numbers for the year. So, and we're only through halfway. So up 16%. As I mentioned for the Qs, they underperformed just a little bit comparatively. Still, 4.7% is a wonderful month, and that's very strong. But you know, this 38.7 or 39% is just really eye-raising, right? In terms of the performance, the small caps came on strong this month. You know, up until this month, at the beginning of this month, the small caps were flat year to date. So they turned in a one heck of a month. Up 7.5%. Even stronger were the mid caps, up 8.4%. They also were right about the same thing, flat coming into this month. So a lot of big performance for the month of June. When you look at international areas, just to kind of look to see where they are year to date, international developed markets, that's the EFA ETF, that's up 10.5%. That's very strong. You know, for the month was up 3%. International had a good month, but underperformed the U.S. markets again just a little bit. You know, it's tough to kind of say underperform when something's up 3% for the month. But international developed, again, the EVA ETF is a lot of Japan and a lot of European markets, up 10.5%, and emerging markets trailing a little bit for the year, only up 4.4%. Bonds, TLT, that's the big ETF that everybody watches, is up 3.4% for the year. Was just down slightly for month to date. Gold is up 5.1%, and you've got some other numbers. Equally weighted for the S&P, trailing, right, up 5.9% year to date, but had a really nice month, up 6.7%. And the equally weighted Qs, that was right in line with what the market cap weighted NDX or Qs did, but up 20.4%. So you know, that's pretty strong to see the equally weighted Qs up 20.4% as in addition to what some of the larger names are doing. I would say that's in the lines of impressive. All right, let's go through some sectors, and I have this. So I'm gonna right now I have this sorted by the best groups sectors year to date, and then we'll talk a little bit about the month performance. But yes, things like the semiconductors, right? I mean, that's been the big story and the big theme this year. You know, going to themes, and one of the surprises of this year, you know, really, I kind of came into this year thinking, hey, what is going to be the catalyst for, you know, some of the bigger names to outperform the Google, the Microsoft, right, the Apple, right? What would be the, you know, and I was kind of searching for a catalyst. What was going to be the new growth, right? Going back to where I was in the beginning of the year, I wasn't very bullish, right, on the FANG stocks and you know, now what people are calling them or as the big seven stocks. I was thinking, what would be the catalyst that is going to get are going to bring back growth to these companies? And you know, the theme of artificial intelligence, AI, has been just that, and it's really been the catalyst for the semiconductors, which are up 50% year to date. A lot of big outperformance there. Of course, NVIDIA is a big reason for that. And then you kind of look what's right there, is blockchain and crypto stocks, also up 50% year to date, right? Probably hasn't gotten as much attention as it should, considering some of the other themes, right? And then when you kind of look at the next best sector, it's been the home builders. And you know, I was talking about this. I was on Bloomberg just a little while ago, you know, talking about how strong the home builders have been year to date. And you know, this kind of comes, I'm going to insert my commentary here a little bit as we go through this video, but you know, it's been one of those things that you know, what's helped me over the year is to follow price, notice, you know, and try to do it somewhat objectively, right? Try not to interject, you know, previous, you know, market opinions. One of the things that I talked about earlier too with members is, you know, younger traders or newer traders, and there's nothing against younger traders when I say inexperienced traders. Everyone goes through that, right? Everyone goes through their first years of the market. But, literally for the first like 3 or 4 months, because I've been talking about the home builders all year long, but when I would quote the home builders and put them out on Twitter, the pushback that I would get, everybody said, oh, well, interest rates are going higher. This is a short, right? And one of the things that I try to teach traders and get traders to kind of overcome is to get past these rules, right? To say, okay, this is supposed to happen, then that's supposed to happen, right? That's not how markets always work, right? Sometimes there's that relationship there, but you need to kind of investigate and do a little bit more homework. And I had plenty of arguments with traders. I said, I think there's something a little bit more than just the move in interest rates, right? So if you followed price, right? Also, if you listen to even some of what the dialogue was after some of these companies, the home builders reported earnings, many of the CEOs were very bright about the future, right? They talked about supply and demand, right, which has outweighed the interest rate concern, right? And the home builders are doing creative things, right, where they're actually offering interest rates that are lower than what the prevailing market is doing to some first-time home builders or some other, I guess, incentives to other customers as well. But so if you have to do a little bit more investigation than what the popular consensus thinking is, because I've heard that so many times this year, right? So this is definitely one of the surprises this year. And again, you have to be clever. You have to do your research. And number one, you have to be objective. You can't, right? Because inexperienced and last thing I'll say about inexperienced traders, but they love these little rules. Oh, this happens, so that's supposed to happen, right? Got to get away from that, right? It's good to have that context in the back of your mind, but trading doesn't work like that. There are no these golden rules like that, right? Because I heard that quite a bit, right? Because markets can change over time. There could be other parameters than just one thing, right? Another thing that we heard all year long from different investors was, hey, in a rising rate environment, stocks are not going to do well. And yes, it is. That's another surprise, right? With the Fed continuing to raise interest rates this year, right? That has not brought down stocks. Now, I'm not saying that it's not going to at some point, but for now, right, if you've been following the trend, following price action and looking under the hood, you've seen much more than just what the Fed is doing. Remember, one great rule Martys has said, and I have this in here someplace. Right, so these are Martys investing rules, right? These are very popular. These are great rules, right? And everybody has said it for a long time in 2022, as well as the beginning of this year, don't fight the Fed, right? That's rule number 6, right? So if you read this, less valid than number 1. What's number 1? The trend is your friend. Don't fight the tape. Okay, so that's this number 6, which again, I've heard this phrase, through my Wall Street career, is don't fight the Fed, right? But it is less valid than number 1, right? The trend is your friend. Price is important. Don't fight the tape, right? Wait for signals, right? If the market does start to turn lower, who knows? There may be some shorting opportunities as we go through the second half of this year, but they're not there yet, right? All right, so that's important. And let's go back to where we were here in the performance. If I can find this. So the home builders, very much. And one last thing I'll say about this, and then we'll go on. But also, what was, besides listening to the earnings calls and so forth, when you go through and you look at some of these groups and you go through the individual names and you see that it's not just one group, right, or one name or 2 names, right? I think that there's I went through this earlier this week. There's actually 7 names in the ITB, right? Again, it's not the FANG names, but there are 7 different home builders that are up over 70% year to date. So as you go through these individual names and you find what's going on in each one of them, you're going to find that it's not just one or two names that's carrying that group. It's in fact, the whole group has been very strong. Tech and software, both up close to 40% year to date. Very, very impressive. Also, the FANG names, right, as a group, they're up 32%. Consumer discretionary, which is largely Amazon and Tesla, that's up 30%. Robotic stocks, and that has a lot of AI in it as well, right? And then you kind of get to some other interesting stories here, right? The transports up 17%. Right? Travel names, steel is up 10%. And then when we kind of start to look at the month, which I'll show you in a second, but very strong over the last month too. All right. So we'll get to that. I mentioned biotech, right? So IBB is actually down 3.3% for the year. I think XBI is just essentially flat. So I think that's one of the surprises of this year too, to not see biotech really participating much at all, right? Energy stocks, right? They're down year to date, right? So again, this is what balances these things out. I mean, we've heard so much, like, and I've said this till I've been blue in the face over the last month, but this is why people have a hard time. They think that there's not enough participation in the market, right? Well, there are some areas of the market that have not done well this year, right? We know that the banks are down 30% year to date, right? They've been a big underperformer, right? And that eats away the returns at the S&P. But if you've avoided that risk, right, then you've done pretty well. If you've stayed away from the banks for the most part, you're doing decently, right? Because that's been one of the worst areas. I still have the pot stocks in here. I'll eventually have to take them off of the spreadsheet, but they're down 30%. They're your worst performer. Also, the energy stocks, right? They really haven't participated other than this month, which they had a good month, but the XOP oil and gas ETF is it was down or is down 5.2% for this year. Solar also hasn't participated at all, right? So again, there's those surprises in there, right? That again, if you're following price action, right, it's telling you don't get involved in some of these groups that are not showing any trend to them, or a sideways trend, downtrend, right? But that's the reason why you have this disparity between where the S&P is versus the Qs, because there are some groups in the S&P that are not doing particularly well. There's no there's no debating that, right? So I wanted to talk about month-to-date performance, right? Because this is also interesting. So let me just get this sorted correctly for you. Sort, old school sort for you. So we're going to, there we go. All right. So of course, we've already talked about the home builders, so I'm not going to talk too much more about them, but they had a huge month, up 16% this month, right? And the important, so one of the things that I highlighted, and I sent this tweet out earlier in the day, was this, as much as you heard about this AI theme and about it's only this many stocks that are moving, right? They did okay, right? Tech, that's still a very respected month, up 4.4%. But look how far down the list they are in terms of performance. So those builders up 16%. Steel names up 15%. Oil services did have, as I mentioned, energy had a good month. Metals and mining had a very strong month, up 14%. Even retail, which was really underperforming, note it's lagged. Year to date, it's only up 5.5%, but had a monster month this month. Blockchain stocks, which we've talked about already, but had a big month, up 12%. And again, look at the transports, up 11.5%. And then you've got the industrials, which I think is very, very strong. There's also the ETF that I keep quoting, AIRR, which is up about 22% year to date, which is much better than the overall bigger industrial group, right? So there's, there you have it in terms of performance for the month. The underperformers, gold miners, they were down 4%. Right, there's the biotech on the bottom of the list, and solar as well. Right, so so there's your underperforming areas. So again, it's not in every sector that goes up, but the market rarely does that. So there's your recap for the month, for the quarter, for the year, I should say. I'm not going to recap the quarter performance because it's just I think we kind of went over enough of the data points, but so some things I wanted to talk about, a couple themes that I mentioned, right? One of the questions that, so again, a lot of surprises, overall in summary, following the price action, doing homework, right? Going through and scanning through and noticing where things have been acting very constructive, right? These are things that set your mind at ease, right? When you go through and you start to see names that have been consolidating break higher, it doesn't matter what area of the market it has been, right? That kind of gives you a sense that this market has wanted to go higher, right? Also, dips. We haven't talked at all about the technicals in this video, but textbook pullback to the 20-day moving average after getting overbought, right? I mean, these are things that you normally see when the market is acting very well, right? And I think for the S&P, which has returned to the previous highs, but not overbought like it was, maybe we can come up here and get 45.96 in S&P futures. The Qs also did not take out the prior week's highs. That'll be something to watch for next week, right? But, they don't have to do that right away. Nice gap up, by the way, in the Qs, and 380. And, at the very least, what we'll be watching next week, and this is what we go through in kind of our end of week videos, is watching what the trend is. What is the price telling you right now? Right, where is the price in relation to the value area for the month? Now we're going to get a new value area for the month of July, and we'll talk about that in our member webinar on Monday. But for now, the price is above all the short-term moving averages. So you could speculate and you could try to predict and you could try to call a market crash. You could try to call a correction, whatever you want. But for now, the price is above all the short-term moving averages in both the Qs and the S&P and the small cap ETF as well. And for now, instead of making predictions, I think it makes more sense to kind of go with the price action. Right now, if we get a sell signal, we'll adjust. Right. I had some questions, and I get this question quite a bit on Twitter as well. Well, Christian, how do you spot, rotations, or do I think that there will be rotations into other groups? Could we see rotation into the biotechs, which I mentioned, or the banks, right? Or solar, which saw a little bit of call buying, of course. But our job is we don't necessarily have to be early into any of these moves. We're going to see them. And if you go through the underlying names within a basket and they start one by one, they start to improve and they start to technically get better, right? It's not going to come as a shock to you. So putting in the homework and watching for things begin to kind of break their downtrends one by one and start to constructively break higher, then that you're onto something, right? Those are the, picking up the breadcrumbs and so forth, right? So again, you don't have to be a crystal ball, prediction person, right? You don't have to make these market calls. All you have to do is put a little time and research in. And that's what we do at Tribeca Trade Group, right? So if you can't do that yourself, I was speaking to someone on Twitter about this. They're like, yeah, tell me how you spot these rotations. And I'm like, just by doing the homework and being objective and observing, right? And being a little bit clever helps too. But if you go through and do the homework, you will notice these things on your own as well. All right, so that's basically it. And then I'll just quickly talk about my performance. I will be doing every month I do also a month end video for members, talking about some of my wins for the month. I go through both winners and losers and how I manage them, right? Because I say just about every month, how you handle the losers is going to define what your performance is going to be, right? Everybody can have winners, right? I mean, that's when the market's going up, especially, right? You should have market winners. Most traders can do that. When the market dips, like like it did a little bit over the last week, right? How you handle that is going to really define how your performance is for the year. That's where traders really separate themselves, is their risk management, their discipline, their overall trading system. So the object is not to give back the hard-earned profits as the market changes and shifts. All right. And even if it was just like what we saw over the last week, where we just got overbought and kind of slipped back to the 20-day moving average, tested it, and so forth, go through and say, how much did you give back? Did you get out of that pretty cleanly? Did you give back a little bit of profits? I mean, I could tell you, I got stopped out of a couple trades, right? I honored my stop prices. That's why every trade that we get into, it has those parameters built in. Where's my stop price? Where am I taking targets, right? So this way, it's not a shock, right? And so you're prepared. All right. But yes, everybody has winners and losers, right? I know nobody talks about that on Twitter, but it does happen. So I go through that P&L review video. So right now I'm up 28% year to date. I got off to a very slow start. Right. So what I've tried to do is really keep my eyes on the road ahead. Right. And same thing for this first half of the year. It doesn't matter what you did so far. Right. Try to concentrate on the second half of the year. Right. Try to win 1 month at a time. Right. Try to get a positive month for July. Right. That's one thing. One of the analogies that I always use in my P&L videos is I talk about Bill Belichick. Right. I do a lot of sports analogies. Right. Why do I bring him up? Because the guy wins championships, right? And how does he do it, right? He concentrates on 1 week at a time. In his interviews, right, after each game, all the reporters, they always ask him, hey, what do you think about next, do you think that you're going to make it to the playoffs this year? Do you think you're going to make it to the Super Bowl? His usual answer is, we're going to work on beating our opponent next week, right? He doesn't get too far from the path of making sure that he accomplishes what's in front of him. And that's how it basically works. If he strings together win after win after win, he's going to make it to the playoffs, right? And if he does that in the playoffs, he's going to make it to the Super Bowl too, right? That's how it works for him. That's how it should work in trading as well. You focus on each week, you focus on every month. And if you win each month, if you have a strong, good performance month over month, right, that is going to add up to a good year. It's just how it is. So personally, I came into this year a little bit more defensive, right? I didn't want to take a lot of big swings, in the first couple months. So I got off to a little bit of a slow start, but I've been catching up quite nicely. And especially the last 2 months, I've had a month, I think it was April, where I made a few mistakes, right? I got out of that tendency of making mistakes, corrected mistakes, and I'm now up 28% year to date. So I look forward to the next half of the year, and executing and following my trading plan, and working hard to accomplish my goals and helping traders along the way. If you are interested in checking out Tribeca Trade Group, right, one of the places where you can go, right, is you could go to TribecaTradeGroup.com. I do have a coupon code for new members. You can get half off the first month. We're doing that special for all of next week, 4th of July special, and I'll get that coupon code for you because I forget what it is. All right, there it is, TTG 2023. I don't think it needs to be caps, but in case, if it doesn't work with lower caps, try it with uppers. TTG 2023, that'll get you half off the first month, provided that you are a new member. I look forward to trading with you, and to going through the challenges that are going to await in the second half of the year. Guys, have a great weekend. Have a great 4th of July.